If you were to ask me how much a mortgage payment would be on a $300,000 house, I say 1%. Well, that's $3,000. Well, Joel, you were off, right? That was too high. PITI, right? What is that? Principal, interest, taxes, insurance. What's my monthly payment? I think probably the most common question is for potential home buyers is like, what's my monthly payment? Because they're always wanting to know what the payment's going to be on that house they like. And there's a lot of online calculators, and how do you figure it out? You get a lot of misinformation. So I figured, why don't we just break it down the way that I do it every time when I'm trying to calculate somebody's payment, so you have a better idea on how to do it. A general rule of thumb, if you just want to be like really, really quick, is I would probably say 1% of the sales price would be a payment. It's probably way too high, but that would be a good factor to look at. If you want to dial it in even tighter, maybe 0.9 of 1%, right? Or a little bit less. So you could do that to calculate your payment. But let me go through a payment obligation with principal and interest, taxes and insurance, and maybe mortgage insurance, depending upon what loan program you're doing. We can kind of come up with what a monthly payment would be for, let's just say, a loan amount of like $300,000, right? So let's just agree for example's sake that a $300,000 loan at 6% interest would be $17.98 So on a 30-year loan, principal and interest, amortization, fixed interest rate, simple, it's going to be that number, $17.98. That's your principal and interest. That's your actual repayment of your mortgage. But now we got to calculate property insurance, property taxes, and maybe mortgage insurance. So for me, the factor that I use is about 0.6% of the loan amount should be what your insurance is. Now, the lender can't decide for you, right, who you want to use for homeowners insurance. That's actually a choice that you get to do. So we can give you some referrals, we can kind of help you, but a good lender is going to frame the narrative on what they think an insurance policy would be to protect the house against fire, theft, hail, water damage, loss of use. Yes, you can have a very cheap and inexpensive policy that may leave you a little bit exposed or underinsured, but for at least the first year, you should probably have the house well insured after you purchase it. And then after you live in it for a year, maybe you know some of the things that may be wrong or right with it, and you can reduce some of the coverages. So for me, if I was to say what the payment would be, I would literally take $300,000 times 0.6%. That's $1,800. That's about $150 a month for insurance. When you're dealing with taxes, depends on where you live in the county and the different taxing authorities. Every property has some sort of tax rate, and there's several different taxing authorities for the property, but it could be schools and city and police and roads and rivers. There's all in EMS. There's all kinds of different taxing authorities on a property. So figure out the area that you're looking at, and you can figure out what the tax rate is. But I would say maybe 2.25% would be a good tax rate. Most of the counties have the houses assessed for what they're worth. We're kind of in a flat market with appreciation. So you can look up the property on the county appraisal district. But if you don't know the particular property and you're just trying to factor in what the payment would be, I'd say $300,000 times 2.25%. That's $6,750. Divide that by 12, and now you're $562.50. So we got the principal and interest, we got the insurance, we got the taxes. Any additional fees could be the loan program you're using has a type of mortgage insurance. MIP is for FHA, PMI is for conventional, VA doesn't have any, USDA has a small guarantee fee. But let's just say we're going to do 0.5%. So 300 grand times 0.5%, $1,500 divided by 12. $125 is the mortgage insurance, right? So if I'm trying to calculate the payment, $17.98, $65 for the P&I, plus $150 for the insurance, plus $562.50 for the taxes, plus the $125 for the mortgage insurance, that's $26.36.15. So if you were to ask me how much a mortgage payment would be on a $300,000 house, I say 1%. Well, that's $3,000. Well, Joel, you were off, right? That was too high. Well, I'm just trying to give you a framework, right? So if I told you your payment was $3,000 and it came out to be $2,600, you would be giving me a high five. You'd say, good job, I love it, right? If I tell you your payment's $2,500 and then we calculate the payment and it comes up to be $26.36, you'd be like, doesn't feel that good because I thought the payment would be lower and now it's higher. So it all depends on who you're talking to. A good lender is going to be conservative in their estimates. They're going to give you real kind of worst case situations. So if the taxes are a little bit more, or the insurance comes out to be a little bit higher because the condition or the age of the house, or maybe your credit score isn't that great, so the interest rate's a little bit higher. That's why I said, hey, just do 1% and you're kind of really good. You're always going to be happy with what the monthly payment's going to be. But here's a good workflow that you can do to kind of figure it out. So this one came out to be $2,636 on a $300,000 house. That's how the comp factor would actually calculate the monthly PITI on a loan amount of 300 grand.